Hello everyone and welcome to our year in review for 2024 employment tax. In July 2023, the Administrative Appeals Tribunal upheld penalties for failing to meet superannuation guarantee obligations on a couple of occasions. Considering the taxpayer's culpability in failing to meet its obligations, the tribunal found that the penalty imposed was appropriate and could not be further remitted. We also saw the Victorian budget introduce several payroll tax measures, including a temporary COVID-19 surcharge, increased annual thresholds starting July 2024, and a modification to the exemption for wages paid or payable by non-government schools. In August, the Federal Court unanimously determined that ordinary time earnings for the purpose of calculating annual leave payments should encompass penalties that an employee would have received for working their regular hours, rather than solely amounts paid at a standard rate. This emphasises that penalty rates are not necessarily synonymous with overtime. September was a significant month for employment tax due to the unsuccessful appeal by Bechtel in relation to the previous finding that travel expenses in relation to fly-in, fly-out employees were not otherwise deductible for FBT purposes. This finding indicated a far narrower view than that applied in the John Holland case, and serves as an important consideration for a number of organisations with fly-in, fly-out arrangements in place. From a superannuation perspective, superannuation guarantee integrity was identified as one of the regulator's 8 key focus areas for the financial year, with the core objective being to continue to expand their use of data to improve superannuation guarantee compliance. October and November were important for payroll tax, with various amnesties being introduced across the country in relation to medical centres. We also saw a significant payroll tax case affecting the real estate industry through Home 789 Resources v. Chief Commissioner of State Revenue. In this case, it was held that the applicant was not able to degroup for payroll tax purposes due to a number of factors including control, branding, location, and the industry of operation. It was further deemed, on a case-by-case basis, that 28 of the 31 payments made to persons or related companies constituted taxable wages on the basis that the taxpayer was unable to establish the availability of the payroll tax relevant contract exemptions for the applicable financial years. December saw the ATO release its annual statistical results for superannuation guarantee compliance for the 2022-23 financial year. Of interest, we note that most employers are paying more than 94% of the superannuation guarantee they are required to pay without ATO intervention. The ATO finalised approximately 14,000 superannuation cases, resulting in around 447 million superannuation guarantee charge liabilities and 157 million in Part 7 penalties applying. Around 56,000 employers came forward to make a voluntary disclosure of unpaid super. And finally, there were 3,660 director penalty notices issued. Moving into the new year, February saw the finalisation of ATO guidance on distinguishing employees from independent contractors, emphasising the importance of written contracts. The ATO also released Practical Compliance Guideline PCG 2023-2, which provides an outline of the Commissioner of Taxation's approach to compliance in this area based on a series of risk factors. In payroll tax news, we saw that an appeal filed by the Chief Commissioner was allowed, upholding the Commissioner's assessment of payroll tax on subcontracting arrangements. In the earlier decision of Integrated Trolley Management v. Chief Commissioner of State Revenue, it was determined the payments made to independent contractors for trolley collection services to various supermarkets through independent contractors were not taxable wages under the employment agency provisions. In the appeal, it was determined that employment agency contracts existed between Integrated Trolley Management and its supermarket clients. This was based on a finding that the service providers worked in and for the supermarket clients, which involved regular and continual work akin to that of an employee. In March, the Fair Work Legislation Amendment Closing Loopholes 2 Bill 2024 passed both Houses of Parliament. Of interest was that the meaning of employee and employer under the new definition is to be determined by ascertaining the real substance, practical reality, and true nature of the relationship between the parties, and that to do this, the totality and true nature of the relationship must be considered, having regard to the terms of the contract and also to other factors such as how the contract is performed in practice. In effect, this overrides and replaces the approach adopted by the High Court in the personnel contracting and YAMSEC decisions, which had given primacy to the terms of the written contract in determining whether an individual was a contractor or employee, and for employment law purposes takes us back to the multifactorial approach that applied previously. For tax purposes, the primacy of the contract remains paramount. In April, we saw the introduction of alternative record-keeping options for travel diaries and employee declarations for certain benefits, to take effect from the 1st of April 2024. Broadly, an alternative record option is available in relation to travel diaries, certain living away from home declarations, the otherwise deductible rule, and certain travel and relocation arrangements. We also saw the decision in Mackey v. Commissioner of Taxation, where the AAT affirmed the decision of the Commissioner to decline to exercise discretion to disregard or allocate to another year the taxpayer's concessional superannuation contributions. The significant takeaway for our clients is to be very careful around timing of superannuation payments. They only count once they have cleared your clearinghouse, not the initial payment to the clearinghouse itself. In May and June, we saw additional activity in relation to contractors, payroll tax, and superannuation. The ATO released its decision impact statement on earlier decisions of the full federal court, each of which dealt with whether individuals were employees for superannuation purposes. This included the YAMSEC case and the JMC case. We saw additional payroll tax relief for GPs in Victoria and South Australia, with various exemptions introduced with effect from the 1st of July 2024. Finally, we saw the AAT reject an employer's exceptional circumstances claim for late superannuation guarantee statements. The employer noted a number of factors as constituting exceptional circumstances, including the illness of their previous accountant, the financial impact of the pandemic, lack of notice of the Commissioner's audit, legislation closing the amnesty period, and the fact that late payments were made in 5 out of 7 of the relevant quarters. However, the AAT found that none of the circumstances that the employer relied on could be accepted as preventing them from lodging SG statements or providing information to the Commissioner about their SG shortfall. It was further held that the fact that the employer provided the information to the Commissioner in April and May 2022 demonstrated that they would have been able to provide that same information earlier if they had made the effort to do so. Thank you for joining us for our 2024 year in review for employment taxes. Going forward, we will be providing monthly video updates on all things GES, so please stay tuned. Should you have any queries in relation to this update, please feel free to connect with your local RSM contact, being myself and Jane in Melbourne, Gina and Neve in Perth, and Jason in Sydney.